how are you? And I know you're excited about our guest today.
I am so excited because I can't wait to learn more. We were just talking a little bit before we started. So, let me introduce today we are diving into the world of healthcare, where we are as well, with cost saving solution special guest Tom Quigley, co owner of Claim Links. So, since 2024, or sorry, 2004, Tom and his wife, Christy, have been on a mission to revolutionize the employee benefits and helping small businesses offer better health coverage at lower cost. So we are really excited to dive in to see what Tom has to say because I am very curious as well. So, Tom, take it away of what Claim Links is and how it truly is quality care for these employers.
We're a third-party administration company managing a solution we created. The Ravens Giants Super Bowl party with my tax attorney and my wife and I in our basement in Loveland, Ohio. And we created a company. My wife worked for Anthem Blue Cross. I had an insurance agency, and my tax attorney had just written his first book through Prentice Hall, and he thought this tax law could work, which is Section 105. So we evolved from there and we created a business all around that tax law. And it helps
Incredible.
everyone out.
So you got to dive in more because I'm sitting
Mhm.
here going, okay, what does that mean?
So what that means is that if you buy a insurance product from whatever insurance carrier, you want to buy the lowest cost option they'll sell you. And then underneath the higher deductibles, you can create whatever benefits you want as a business. So you can cover wellness, you can cover whatever you want, as long as you're not discriminatory and you're charging everyone the same cost for those benefits in their classes.
Okay, so take our dietitian company and
Yep.
we have a wellness offering. How how does this work? And I'm truly asking the question because I
Yeah.
don't know. This isn't like preempted.
So what we're doing, what I would do is I would say, okay, we're offering your employees, you can offer them whatever dollar amount you want, up to a certain dollar amount if they want your program, and the employees get that money to pay for it tax free, and it's a business expense for the owner. So literally, they can enhance the wellness, the dietitian, and they have to follow the rules of uh, outlined by the IRS. They're actually what's called Section 213D as in dog expenses, but the IRS puts out a nice publication called 502. And if you look at that, individuals can do your program using their health savings accounts, but companies can literally set up a whole program for their employees and look like heroes and do it with tax-free dollars.
That's incredible.
I
So,
wrote, yeah.
yeah, so this is amazing. Now, in light of what's going on with our government and things being in or out or whatever, what does the landscape look like for this?
It's only expanding because, first of all, every major company, Apple, Procter and Gamble, General Electric, all use this tax law, Section 105, that allows them to be self-funded. So they're enhancing it, allowing more items to be included. For example, I tore my deltoid muscle playing hockey about 20 years ago or so. And my doctor wrote a prescription for a hot tub, so I got to write my whole hot tub off as a business expense
Well, that's incredible.
for therapy
I
under
think I think I need a therapy hot tub. I've been trying to
it's
convince
gotta
my
you know
husband about there.
you gotta follow the rules. You follow the rules. It's they're tax breaks. But
Okay.
businesses, what do they pride themselves on? How good their benefits are because they're trying to retain and attract employees.
Yes.
However, the costs have gotten out of control and their benefits, quite frankly, stink. So if you can save thousands of dollars on how you buy the health insurance, that allows you to put in programs that are better for the employees than what they could get from P&G, GE, or any of them, because no one's doing it.
So how many companies are you in as of right now?
Oh, we right now, I believe, have over 150 employers, and we saved them totally, collectively, probably 20 million a year.
Wow.
Yeah, from where they were when we first met them. I have one company, they in 2018, this year we're saving them 1.3 million from where they were in 2018.
Wow.
And they can offer good programs.
They're offering zero deductible plans with copays for everything, so people actually understand their benefits.
Okay.
And then they give each one of their employees a $40 benefit bank so they can buy whatever product. See, that's where a product like yours comes in. You know, we're going to give up to $40. You can use your funds, whatever, however you want, or 60 or 100, whatever dollar amount.
Right.
Yeah. And that's what they're all missing, because they're buying health insurance from a group health insurance agent who makes compensation based on how much you pay. And if all you have is a hammer, everything looks like a nail. And that's what, in their eyes, everything's group health. Group health. You buy all the benefits from group health. And that's the worst thing you can do. All you want from the insurance company is catastrophic coverage, a network of some sort, and they cover preventative because of the Affordable Care Act. Now, the smaller companies are making huge mistakes, because if you have fewer than 50 employees, there's no penalty for the health insurance, the employer mandate penalty. So why wouldn't you let all your employees make your plan unaffordable on paper in your handbook and allow all your employees, if they choose, to get subsidies, tax breaks, and then you can pick up the deductibles through the medical expense plan. So I literally have some people going from 2,000-3,000 a month a family to zero.
Really?
Yeah, one of Neo's referrals, her premium went to zero with the
So,
national PPO network with Blue Cross.
so it went to a national plan.
Yeah, well, it's everyone, the misnomer is everyone's like, I don't want to use the state health exchanges or the federal health exchange because I don't want to be on Obamacare. And I start laughing because everyone's on Obamacare, because that's just the law that states what has to be on insurance plans. All the exchanges are set up for is that enables you to receive tax breaks if you buy your insurance through them, through the same insurance carriers that you're buying your group health from. But most people are unaware of this. So literally, I have in some states the same exact insurance product they're buying. If they bought it through the exchange, they pay less than they would with no subsidies than they are for group health. But there's no commissions on a lot of them. So again, no agent's going to do it.
Right.
So, Tom, how do you get paid?
20% of what I save companies. Every dollar I save them, I make 20 cents. And it's monthly we bill, and every year they renew, and we have an inflation rider on it. So we say, okay, we're going to increase it by 5%. Most people are getting 10, 20% rate increases. But my single rate for my own company is $141 a month for an employee, using a plan that you can go to any doctor in the United States.
So what I think, Kelly, that Tom's able to do is that he just uses math. He always talks about that on the podcast.
Yeah.
And it's a no-brainer, and it's work. Like, I mean, Tom talks about what these insurance reps make. Talk a little bit about that, Tom, that basically what you're saving. I mean, I've had companies that work with Tom literally say their premium goes up every year.
Yeah.
And the insurance, and then basically what happens is that insurance guy makes a lot of money. And Tom, kind of tell that story, how much that insurance guy makes. And then the fact that really the commission of that insurance rep is the money where the money's made. And then they just can increase the rates on people. And they say, oh, yeah, you have the best plan possible where the company's missing out.
Well, they're making money two ways. One, they get a commission, and then the agency, the larger ones, get a bonus of all their business with that company. Usually it's 5 or 6%. So if somebody's got $1 billion a premium with Blue Cross, which isn't very hard today,
Right.
that is what, 50 million a year they're making just in bonuses.
It's crazy.
Wow.
So there's no incentive for them to cut the rates to, 100 million because they lose out a lot of money. So all I'm doing is showing people the math on that. And then the insurance agents, though, only get bonuses based on group health. Group health makes 0 cents for most companies.
So, do you think, again, I think that things are getting all shaken up. Do you think that this is going to come out more and more people are going to see the math or understand where the kind of the middleman is in this? And
Well, a lot of the you get two laws, HIPAA and the Affordable Care Act, and there's no pre-existing conditions. So even the large companies are making huge mistakes because they're high utilizers. The people costing them $1 million a year. They should be putting them on an individual plan using the same tax law to make it tax-free, the benefits, and they go from $1 million risk down to 6,000. One person saves them $994,000, and they
one
get the
person.
same network a lot of times that they're already using. It's
So,
it's crazy what people are
like you
doing.
said, it's just the math. It's definitely
It's an algebra word problem the way they're buying it right now. And what I do is I break it down. Most people understood the basic math in algebra. It was the word problems that killed them. A train going 20 miles north meets the one coming 50 miles south at what point? The answer should be who cares? But you get an F in algebra then, right?
right.
So what I'm doing is I'm going, okay, here's the formula. Yeah, you see, it makes no sense because what you're doing is, in my case, you're giving the insurance company $2,000 and they're only covering $1,000 of risk for you. So why are you giving them an extra $1,000 over the course of a year? If you use it. If you don't use it, you're giving them $2,000 more. See, and the agents are selling the products that have the lower deductibles and it makes no mathematical sense. And they don't show the lowest cost options because their bonuses and their commissions are based on premium. So
So
my
insurance
first,
insurance
yeah,
agents don't like you, meaning the insurance agents that are for the healthcare companies selling it.
yeah. I mean, if we compared it to a hockey game, I probably would not make more than 10 seconds into the game. That's how much they like me.
So it's intriguing. Every time you learn something out of Tom's mouth, in so many ways. Got to talk to Tom. But Kelly, what are your thoughts? I mean, I was trying to tell you, this is somebody
Well,
that is just like,
again, we are a health and wellness company and we are an education company. And so us being able to look at the companies that you're supporting and to let them know that these services are covered by HSAs, FSAs, and can be put in under that
Mhm.
plan. Like this is where thank you, Neil, for introducing us because, those 150 people or companies, could definitely be utilizing this tomorrow. They could be in touch with dietitians. And we know that if they are self-insured, even if because we're in every major network, they're going to have to pay out of pocket for that claim anyway. So why wouldn't they just use this as a member benefit and let people know about it and get that tax write-off?
Well, because they have what's called an insurance broker or agent who is any good idea makes them look bad. So if you're going into these companies, what are they telling you? They're telling why they wouldn't do it. Well, you have two reasons. One, the HR department thinks they're overworked and they won't put anything in that's remotely change because it makes them look bad. You know, I follow the adage, don't let the truth get in the way of a good story unless your money or your rear end is on the line. You walk that through, think it through. Who looks bad and whose rear end's on the line?
Right.
You know, and the answer is whoever didn't. Why didn't you guys tell us about this? And the Affordable Care Act made wellness programs huge. And they finally last spring came out with the guidance letters, I think it was in April, of what they envisioned is, you know, tax-free and what's not. But it just amazes me how, you know, these self-funded companies, first of all, the way they're self-funding makes no sense because the HIPAA laws totally ruin self-funding traditionally because you have a good, healthy group and because you can't ask people medical questions. You hire 10 people and three of them, one's a hemophiliac, one's
Oh,
has
yeah.
cancer, and one has AIDS. You have to take them, and now you go from having a great pool to you're lousy. Well,
Well,
yeah.
And
so where do you,
so I wanted to ask this question. How do you kind of deal with those things, Tom,
Well,
with health issues of the
well, if
employee?
you set up the plan right, those folks, their health conditions don't even matter because of their pool they're in is with millions of people, and the states and the federal government protect the consumers by not allowing the insurance companies to gouge you. I'll give you an example. COVID came, we all know. I mean, right, state the obvious in sales. So in the COVID came in, well, some of these, the state departments of insurance, some of them, I mean, no offense, they're crooked. They're getting premium tax. Catch my drift. So what happened was they allowed small groups in some states, Maine and some other ones. Shocking, Maine. Um, and what they did is they said that these carriers could base their medical claims on what was happening prior to COVID, not actual claims, because there was hardly any claims during COVID because you couldn't go to the doctor
right,
or the hospital. Well, the individual plans, the federal government said no, and the states said no. So that the insurance companies, almost everyone got decreases on individual, which then made the individual plans cheaper than the small group plans with the same networks in some states for the Blue Crosses and all of them. So, I mean, it's just crazy what they did. So what they said is, okay, well, you know, you only had 50,000. Well, we'll say you had 5 million, you know, because COVID, you know, we know those claims would have happened, but they didn't. And it's just defies logic.
right.
And that's what they did. And the individual didn't allow that. So these states, the individual plans, and because of the 1954 tax law, individual plans, and because the Affordable Care Act, they all meet the requirements, you can use that to finance the catastrophic coverage to provide benefits. So no one took advantage of that, or it's still today, and the gap's even wider now in some states because of that. And they're never going to make it up because, you know, they let the group carrier go up 10% and they let the individual go up 5. It just gets bigger and bigger.
Here. So what is with the weight loss medications and GLP-1s, what is the deal with that?
It depends on the diagnosis. So if it's for diabetes, it's covered. And it's covered, I mean, on wellness and weight loss programs. If it's medically necessary for obesity or whatever, even if they don't have diabetes, you can write some of that off as a business expense. Now, just because the insurance carriers may not cover it doesn't mean that it's not eligible to be covered under a medical expense reimbursement plan, a health savings account or a flexible spending account. The FSAs truly make no sense with an HSA unless you're doing it for dependent daycare. It makes total sense for dependent daycare, but they need to up that. I think it's 5,000.
Oh,
I
that's
can't
like
believe what daycare
that's 1
costs.
month.
It's insane.
Yeah, that's really low.
So that's what they're, doing, and they limit, I think, medical to 2,500. But a health savings account, I mean, if people understood a health savings account, they would never touch. They'd put the money in, and then they'd keep all their receipts. And when they retire, all their money's coming out first as tax-free dollars because there's no limit. You don't have to use it in the same year.
It's about the math. That's the problem, Tom. And that's why I think that you need to contact Tom, even if you're an individual, because you do
Yeah.
work with individuals as well, Tom, right?
Right. We help them. We show them how to. Everyone's infatuated with dental plans, including you, Neil. Everyone wants dental. Everyone
Yeah, I
needs
do
that
want
dental.
dental, and I have to contact you soon about that. Yes. Okay.
So, but
So.
disability is the most important one. I mean, when I used to do conferences prior to COVID, I would start off with you can buy 3 insurances. That's it. Go. Everyone's just, after 5 minutes, I go, okay, I've had enough of this. I go, this is what I'm buying. I'm buying a life policy. I love my family, a disability to protect my income, and a liability plan to protect my assets. Why would I buy health insurance when I can claim bankruptcy or set up a payment plan?
Right.
And they have to take you. Ask all the people who came up from Mexico that. So that's exactly what you get free health insurance. If you have an emergency, they have to take you. So why would you pay more on health insurance than your mortgage? That's what people are doing.
Yeah, no, we are. And that's why I can't wait to talk with you because just this morning, my insurance rep was here. I literally have the packet sitting here this morning. So this is
So
beyond.
I was trying to tell you, Kelly. I
I
did
haven't
tell you.
I haven't signed anything yet. So
No, I just trying to tell you. Oh, Neil's bringing some because I've heard all the, oh, I can do this in healthcare. And then you find the fine print and you're like, no, thank you. This is not, I can give this to my employees, or no, thank you. I can't take this myself. Well,
Yeah.
Alan Porter introduced me to Tom. Remember, Alan introduced me to Kelly.
Yeah.
Alan's the connector too. Thank you, Alan Porter, Strategic Wealth Strategies. But I said, this is absolutely unbelievable. And once I started looking at this, I said, okay, Tom is a guy I'm introduced to thousands and thousands and thousands of people. And Kelly, do I know thousands and thousands of people? I do.
You do. And I'm so grateful, Tom, and to Neil, because I do think that this is something we have employees, we're paying for health insurance ourselves. And then for also on the flip side, to be able to offer our programs to the people that you support. So I think this is a huge podcast for us today.
And this is just the beginning. Wait till you see the next guy I'm introducing you to. And this is just the beginning. I mean, I can book people all day long. It's
No,
the
Neil,
thing,
no.
and it's like connecting Tom. And it's like, Tom, you're going to be busy. Just wait. It's just, this is just the beginning.
Well, the other thing that some people have reverted to is buying those Christian health plans. And I refer to them as, it's like living on a prayer because
Okay,
you
Tom, we got to get Tom off the air. That's the one reason why he needs a PR guy like me.
Well, you got to hear it out though, because you don't know if they're going to cover it or not. It's in their print, you have no idea.
Right.
And then you have to say, to get on, you have to believe in Jesus. On Good Friday, we can talk about this. And I had a friend who happens to be a Jewish man, and I said, well, hey, time out of here. How did you get on this? And he said, well, we believed that there was a Jesus. We just didn't think he was the prophet. And I said, okay, well, that's great. So you got on a technicality. I go, but, if they find that out, they could decline your claims.
Oh, wow.
I mean, it was just
no, it's Tom. Tom has some interesting things, but I found out Tom is a boxer and a hockey guy, and I'm a pro wrestler. Wait till Tom and I duke it out in the ring. That's the next phase as I'm making my comeback.
Tom, where do you live?
I grew up in Massachusetts, but I live in my office is in Cincinnati, and I'm actually in Florida right now, Fort Myers area.
Nice.
So we're in Maine in the summer, here in the winter, and once in a while I have to go to Cincinnati. Like I always tell people, the best part of Cincinnati is the rear view mirror when I'm leaving.
See, but you said something about Ohio, and I disagree with you, Tom. I could be in Ohio when
You're
it's
in Ohio, aren't you, Neil?
yes, I am now. I'd rather be in Mentor than Pittsburgh. I'm going to get really in trouble now, but appreciate it. Okay, the best place, claimlinks.com for Tom and Kelly. Go to kellyschoice.org and purchase her book today. What book is it, Kelly?
The new weight loss era. We have it right here. Woohoo! So
Yes.
yes, we have a book, Tom, talking about the GLP-1. So that's what we'll connect after this. I'll make sure we get connected and help a lot of people out together.
Nice.
Appreciate it. And then the cool thing is using AI for summaries. Appreciate it, Tom.
Love
Thanks,
it.
Kelly. All right. That was the special simulcast of the Neil Haley Show and the Talk Nutrition to Me podcast with Kelly Springer, guys.